Aloha everyone, Joshua Hayes at bigwavetrading.com. We are about to enter a seasonally weak period for stock market returns. From June 7th to June 11th, the S&P 500 since 1950 has annualized performance of negative 13.7%. So if you're really bullish here leading into the next week, just keep that in the back of your mind. There's also a period of June 12th through the 17th where we're actually bullish by 14%. So the next 2 weeks are actually going to seasonally, 1950, cancel each other out. And then after that, buckle up, everyone. June 18th to June 27th, the annualized return since 1950 on the SPX is negative 26%. That's June 18th through 27th. That's followed by bullish 3-day period of the 28th through the 30th of annualized 32% gain. So it's sure to be a volatile month. We're in a seasonally weak 6 months period from May to the end of October, the beginning of May to the end of October. And on top of that, I want to remind everybody, even if we break out to new highs here, there are enough positives that say we can keep going. And at the same time, there's enough negatives that say that we should expect a fake out breakout. I could see us break out here and rally higher. However, that then will lead us into the most bearish 2 months of the stock market returns, which are August and September. Now that's based on the historical data going back to 1950, 70 plus years. In the last 20 years, though, for the SPY, August and September haven't been that bad. In fact, they're about on average with all the other weaker months, including October, June, and February. And the worst month actually in the past 20 years for the SPY is actually in January. So that's kind of different. But I want to show you the kind of mixed messages we're getting. I'm going to show you my stockcharts.com chart here of the SPY. I guess I could have also done this. Let's see if this will let me draw that. There we go. Okay, so you can see the SPY is at the levels that we saw back in early May. But the RSI, you can see it's making lower highs. It's not a death knell, but it's something to consider. MACD, same. PPO, same. And something I really haven't seen since we started to move higher back here in March. Negative divergence in the accumulation distribution line, very short term, and negative divergence in stochastics. It's not saying we are going to fail here, but if we break out and we continue to see this negative divergence, I expect that we'll come back into the trading range that we've seen between the recent highs and the recent lows. That being said, at the same time, I have indicators that are bullish. Familiar with these weekend video lessons know that the time segment volume and the VIX is important to let me know when I need to increase size. On that note, the time segment volume is bullish on the SPY on the daily, weekly, and monthly time frame. That's all lined up. IWM, bullish on the monthly, bullish on the daily, but the weekly, not so much. I like to see all three of these lined up, especially when I'm in the midst of bearish seasonality, a time period where stock market returns are either subpar and or we get pulls. And with the VIX like that, or with the IWM like that, it just doesn't instill a whole lot of confidence. Now, I like that the VIX is below 20. I like that the monthly TSVs are bullish. But with the bearish seasonality, the bad volume profile, chart version 7 chart, you can see we've wedged higher into these recent highs. Look at the average daily volume since then. Look at the direction it's going. Look at the below average volume bars. SPY, QQQ, IWM, DIA. It's the same thing across the board. So really, we're range bound, as you can see in the DIA. Really, we're range bound in the SPY, QQQ, and IWM. I suggest keeping an open mind here. Price is all that matters. We have some leaders that continue to look very well, like Facebook and Google. But then we also have some former leaders that just can't get off the floor, and the volume doesn't really suggest that they want to. I'm just looking at some of the names that, I like ARC, PLTR, Tesla. We're just not really seeing bottoming performance there. But there are some leaders. The market's got some mixed messages. Looks good, time segment volume-wise, VIX-wise. But with all these mixed messages, the bottom line is, even if we do break out, we could reverse. Even if we do break out, I doubt it's going to be smooth. It's going to be choppy. Just be careful here, everyone. It's bullish, but it's also at the same time concerning. Cautious bullishness is advised here. And if there's any big, huge reversal, guess who will not be surprised? This guy and everybody else at Big Wave Trading. Or the final indicator I want to review before we're done with the indices is this TTM trend momentum and TTM squeeze. On a daily, we are firing in a slingshot manner while in a loose squeeze. If this turns green and we hit new highs, I think that we're going to easily have a measured move from here to here. I could use a Fibonacci retracement tool here to here. And if we scroll down here, we can see that we can project a move to 427 or 434. There's multiple ways you can do this. Fibonacci retracement extension, Fibonacci symmetry, connecting this low to this high to this low. You can see where that puts us. But the bottom line is that looks good. On top of that, SPY is above its volatility stop. That is the case in all of these indices. So that's good. TTM trend momentum, DIA, look down there at the blue bars. IWM, QQQ, SPY. They're all moving up. And I just noticed QQQ is actually firing from that loose squeeze green here. So that's all bullish. But at the same time, there's negative divergence also in the TTM momentum trend indicator. Look at where these levels are here compared to the current levels here. Doesn't mean anything. It's just something to be concerned. It's just something that I'm watching. Now, the IWM actually has short-term bullish divergence, but still, overall from these highs, there's still no positive divergence showing up. Can't have negative divergence because price isn't hitting higher highs. But the bottom line is, it looks okay. It's not great. Just more mixed signals. So, breakout to new highs. Price is all that matters. But take everything that I've talked about into your trading heading into next week, which is a seasonally bearish period. I suggest personally to keep an open mind here. We can resolve either way. I got too many things that say, hey, we can still go a little bit higher. I have nothing that says we're going to scream higher, explode higher, and it's going to be nice, smooth sailing to the new all-time highs. Nothing suggests that. So keep that in mind. I was hoping I would have a new quality long signal for everyone to take this weekend since I'm making a public video lesson. However, I do not. As we head into the bearish seasonal week, I did receive some actionable signals on Friday's session, and I will set up the orders on Monday. But none of them are conviction trades. They're all good trades based on the potential reward to the inherent risk. None of the signals are strong enough for me to increase size or have conviction on. On top of that, there was only one quality long signal, and it doesn't have enough trading history or enough of, I would say, enough trading history is just good. That's good enough to really have any confidence giving this out publicly, even though it is liquid. So while there are no new long positions, I just want to review it to everyone, the end-of-day stuff that is working. Right now, I'm getting a lot of feedback from members and non-members saying that they're getting shaken out of their stocks, they can't hold on to winning positions, and that it's a very tricky market. Guys, I hear you and I feel you. It's happening to me. I am long so many stocks that have shaken me out of the vast majority of my position that it's comical. At the same time, on an end-of-day basis for big wave trading, I am still tracking multiple long positions that I've personally been taken out of that are continuing higher. Now, how does that happen? I have tight stops. I keep tight stops. Once I'm green in a position, I hate to see it go red. And with the market not giving me clear momentum or trend signals, I'm going to get shaken out a lot. I'm seeing some over optimization out there and some people trying to figure out how to not get stopped out of their stocks. And I just want to show you it's a very difficult task to manage, and you're going to get stopped out of stocks. Now, I just want to also make mention, by using my methodology, it keeps you out of certain stocks. There was a stock that I gave out as a long signal that has failed dramatically. My trigger in was 81.75. It hit that intraday the very next day, but I didn't get triggered in at Interactive Brokers. Interactive Brokers did not fill my order, so I never took a position. But ARC-B failed. However, on an end-of-day basis, this is a fail. I tell all my members, guys, if I have a new long position and you get long, you can use those initial stops, and my final stop on this trade, if it triggered and filled, was right here. And so once the stock hits 75.19, you are out, and you don't have to hold it down to 69.93. But I also tell members that after my initial stops, if that initial stop isn't hit and the stock trends higher, you can wait for my end-of-day sell signals that I post on my website under the watch list pages every day. I do 50% end-of-day sell signals based on closes below the 20 and 50 simple moving average, and 100% sell signals. One of the stocks that hasn't triggered any sell signal yet since going long is IDT. I have only a very small position left in IDT. Why is that? Do you see this move lower here? With this move lower on that above average volume, I decided to put half of my sell stops at 23.09. That was splitting hairs with 23.08, so I put it at 23.08. The very next session, or not the very next session, but a couple of sessions later, hey, that gets run, and I get knocked out of 50% of this. But do you see the reversal candle? I have to start working on a buyback methodology that when something like that happens, I get long when it crosses back above 24.99. Had I done that, my full position in IDT is still on, and IDT is now up 48% in a little over 1 month. This is a quality liquid position. It isn't speculative. Now, we also only get long once we trigger up and through the good to cancel buy stop limit order price. So if it doesn't trigger, it doesn't trigger. On Thursday, I gave out FNGD as a hedge position. The trade was only active if it trades above 340. The next day, FNGD, does it trade above 340, triggering at 341? No. Is the trade still true? Yes. The close at 317 is splitting hairs with 318. My final stop on this position, since it's a hedge, is the 52-week low. So I'm calculating my size based on this buy stop at 341 to this sell stop here. Right now, I'm only holding or risking about 1% of my total account capital, up to 5% of my total account capital per trade. In strong markets, I'll risk up initially, which should never ever hit unless the stock fails right out the gate, 5, 10, 20R per trade. I'll load the boat on a great signal. I have no qualms about it. CBNK, kind of close, but not quite. Want to remind everybody that volume truncation, look what it is to the volume bar, max green bop, that's a beauty. So far, so well. It's working. On top of that, CLVT. Everybody, volume truncation, even though it was barely volume truncation, you had it. Pocket pivot point signal, the blue spiking line, max green bop, it's working perfectly. But most are not working like that. Most are not working like IDT. Most are doing like CLFD. You see when I went long CLFD, see the white triangle? Means there hasn't been a 100% end of day sell signal. Look at how much it's up, 82%. Guess who no longer has a position? Me. Do you see that low right there? Do you see that candle right there? That's it. Shaken out completely. Buy it back, which I didn't. You're back in the position. Never fully fails. And it's up. Going to have to start adding this to my repertoire because of the overall market. TIGR. This was the new long position here. Do you see this move below these support levels here? Right here? Guess who was completely knocked out of their position? 1455 is the low here. 1420 is there. Guess what? I got knocked out. Still tracking on an end-of-day basis because it hasn't failed on an end-of-day basis. It's up 81%. What can I do? Nothing. MRVI. Do you see this move right here below this level and this level and this level? Knocked me out of half of it. Nothing I can do. Still is working, but in a better uptrending market, I'm not going to get shaken out. It's going to move steadily higher, similar to how CBNK or CLVT is. MDP, holding on, but once it moves higher, see that bar right there? I got to move half my stops to here. Got shaken out. It's working higher. Am I upset by it? No. I understand the market environment I'm in. INTU. So if you guys want to know how I'm ending up with so many long positions, this is how. Normally, I get a few great signals and almost all of my account capital is into like 5 names. And then I'll have like 20 names on the side because I'll be fully maxed out. I won't be able to take any more positions. In this market, since I'm already trading small initially, that's going to automatically allow for more long positions in the portfolio if signals trigger. And then the shakeouts, it's going to knock me out of most. So I'm going to be long stocks like INTU, where because of something like this right here, this shakeout bar right there, I don't think it went below that low, 386.50. Yeah, so it did. So it shook me out a half here and another half right there before working its way higher. That's how I end up with all these positions. 22%. Still good on an end-of-day basis. Hasn't failed. AVID. Guess who got knocked out of this one? Very small position left. Me. Up 75%. But guys, when they pull back and they're this choppy, because of my initial tight stop management, I'm going to get shaken out of names. I'm okay with it. It's a tough tape. SGRY has been pretty smooth. But do you see this bar right here? Do you see that candle? Once again, that buyback methodology I'm talking about, I'm going to have to implement it in my trading. It's something I never used to have to worry about. But in these choppy markets, this is what happens. SGRY is up 66%. Back in the day, I would have probably near my entire position because I do take profits. I trim and trail. So on each big swipe up day or extension, like up here, I'm taking profits. Probably take some profits up here. But I don't get shaken out like I normally do. PDCE is one that's working. No shakeout so far. That's how they're supposed to act, 23%. But I just want to show everybody that's trying to optimize, it's very hard to do. If you don't want to use support levels or moving averages and you want to use ATRs, I just want to show you it really doesn't matter. If you're going to get shaken out, you're going to get shaken out. I'm going to show you something. So some people are trying to figure out how to stay in the trades. Well, if you don't like that and volatility is too much, you could always use the volatility stop on stocks or the ATR. Now, I know this chart's noisy, so let me do something for you. Edit. Make this. Can I make it wide? No. Line width. There. Let's do that. So I just want you to focus on this thick white line. This is a Keltner channel based on a 21 EMA, and right now this is just a 1 ATR standard deviation of 21. Normally it's a 1 ATR of the 14 period simple moving average or exponential moving average, but I use the 21. So with IDT, had you done that, and initially this was the signal, this is when you were triggered in, your 1 ATR has never been hit, you are still long on the stop side, IDT, not being shaken out of any of it. So that one worked. But let's look at some of those other ones. CLFD. Remember the long signal back here? This pullback, it would have gotten you. Would have gotten you. Would have gotten you. Didn't matter with the 1 ATR. TIGR. This was the long signal right here. It would have gotten you. I don't even know if that's supposed to be right. CBNK, which I showed you so far, so good. CLVT, so far, so good. MRVI, heck, keeps you in. But if you have stops based on an intraday basis, you got taken out. Didn't matter. The whole point is, no matter what you use in this market, it's going to be tricky to stay in positions with the full size unless you give yourself some wide stops and get lucky. And I hate to tell you, everybody, this, hard work does not equal luck. Luck equals luck. Hard work equals hard work. Skill equals skill. Skill plus hard work plus luck equals extreme success. Any of those variables are out of the equation, you're not going to have extreme success. I don't care what anybody says. Hard work does not correlate to luck. Luck does not correlate to hard work. You're going to need a little bit of all. With MDP, you got lucky. Your 1 ATR wasn't hit. All is well there. INTU, guess what? From the long signal here, your 1 ATR would have gotten hit. You would have gotten knocked out. It's almost impossible to stay in these names. SGRY, you would not have. It continues to work. Why did SGRY work and AVID did not? Right here, you got taken out right there. I don't know. It is what it is. The whole point I'm trying to make is you can't prevent shakeouts and fakeouts in this market. The only thing you can do is know that it's going to happen in market environments like this, and you either have a way to get back into it, all those candle reversals, and or you got to be okay with getting shaken out. Of why I want to start getting back into these on shakeouts. So on this signal here, you can see the volume truncation and max green bop, right? Beautiful, beautiful. Right off support above the 50 SMA, right? Well, my least favorite volume surge signal comes whenever a stock is being added to an S&P index, especially whenever it's a big cap stock. Smaller cap stocks, different story. Big cap stocks, it's the signal's prone to failure. CRL gave me a signal, triggers and fills me in this day, and of course, this day intraday violates my one and only final stop at 315.42 by trading down to 313.10. But what does it do this session? Hammer candle, reversal from the shakeout. What has CRL done then? Since then, take my small stop, get back in, and now I'd be up 5% on CRL. So I just want to show you about this shakeout reversal. Undercut and rally is what I call it. Undercut and rally. Undercut a support level, rally. I've got to start getting myself back into these best trade ideas that have this happen, that shake me out of either all or part of the position. But by the end of the day, of the full shakeout or partial shakeout, still looks good. This will be something that I work on moving forward. The swing stuff is still working. The best stuff, though, continues to be intraday. How about all the moves in AMC, LEDS, SENS? I mean, intraday, if you can do that time frame, that's the one you want to focus on. The setups are the cleanest and the best. No overnight risk. That's still my preferred time frame, even in this market. But if you don't have time and can't be around the computer all day, like I can't be around intraday all day, especially with my current commitment, this methodology works great, but you have to adapt to the current market condition you're in. And if you guys don't like any of that, I'm going to remind you, we have the quarterly portfolios over at Big Wave Trading. I now have 4 different portfolios, did have 3, added a new one, a value dividend portfolio. 10 stocks, 10% of your capital each, hold for 90 days, and we redo that. We rebalance, reconstitute, whatever you want to call it, every quarter. We then sell those 10 stocks off, buy the next 10 stocks that are leaders via their relative strength versus the market, the industry group versus the market, everything. It's all about strength, beating earnings, beating sales, beating estimates, raising guidance. We look at all that stuff. We take the top 10 stocks, we buy them, 10% of the capital in each of them, and you hold them for 90 days. We had our best quarter in Q4 of 2020, and then our worst quarter just happened. But we're back on track since we rebalanced on May 19th. The S&P 500 is up 2.8%. Growth A is up 5.5%. Growth B is up 3.3%. And the strong relative strength accumulation distribution is up 7.3%. They're all beating the market. So we're right back on track. And that's just a buy and hold. You can trade them however you want. You can do it however you want. Just like with the swing trades. Right now, per each trade, I'm only risking like 1%, 2%, 3%, 4%, 5% of my account capital initially on the trade. You don't have to. You can go all in and just obey my original stop that I give to everyone before I enter the order on my Interactive Brokers platform. So you can follow me. You can trade them however you want. 10% into each new long position if you want. Me, I'm doing 1 arm max risk from buy stop to sell stop currently, and I'm only increasing the size for signals like CBNK, CLVT, etc. And whenever I get a great signal, whatever cash is in my account, if it's 70%, 80%, 90%, 10, 20%, I'm all in. If it's a near great, near perfect signal, which I talk about on Big Wave Trading to all my members, it's 50% of the account capital available. If I have $200,000 available, $100K goes into it. If it's a perfect signal, all $200K goes into it. And that's just how we do it. But the quarterly portfolios is kind of a way, it's a hands-off way. We stick with leaders, and that's it. We just rotate into the new crop of leaders, 40 stocks, 4 different portfolios, do it every quarter. Swing trades, I tell you when I'm sizing up. I tell you exactly what I'm doing. I give you the exact parameters to get into the trade and my exact sell areas to get out of the trade before I enter the orders on my end. And intraday, right now I can't be around, but I tell everybody what to look for with the VWAP reclaim, TTM squeeze methodology, stocks with catalysts, low floats, high short floats, etc., especially low institutional ownership, small market capitalizations. You know, it's all discussed and told by everybody at Big Wave Trading. So I want to remind everybody, we have a very low price introductory level at StockTwits, the room. That just gives you the top 4. If there's less than 4 new long positions per day, you get them all. If there's ever more than 4 new long positions per day, which happens randomly, you'll go 12 days without, with 1 or 2 signals, and all of a sudden you'll get 1 day with 8 signals. The top 4 will always go in there. I post all my new long signals and all my sell signals in there. The gold membership on the website gives you all the trade ideas that are quality, plus video lessons and commentary every single night. Platinum membership gives you everything. The chat room, where you can talk to me 24/7, and all of the trade ideas, including stocks like EYES. I had FNGD as the only quality long signal on Thursday for Friday. Didn't trigger, so nobody should be long the stock. I still have it on the books to trigger at 341. This hasn't failed yet. The market reverses, trades above 340, I'll get long this hedge. But at the same time, I only had 1 new long position for Friday session, and it was EYES. And as you can see, it was up 15% intraday. How come there's no white triangle there? Because I'm already long EYES from here. This was the long signal here, pulled back, but maintained its chart structural integrity. Pulled back on lower volume and held green bop the entire way. I just reduced size each day for each lower low to calculate that buy stop to sell stop. Triggered and filled me on this day, and by here, you're up 480% plus on this position. Still tracking it on an end-of-day basis from that signal. Can you take a guess when I was completely knocked out of my position on an end-of-day basis? That rollover period here. But we got an ad signal on Thursday, triggered and filled on Friday. It's doing very well. This is what can happen. These kind of trade ideas are given to platinum members, but they are not given as quality long position to gold members, because anything under $10, anything that averages under 100K shares a day, I don't want too many people jumping above my orders. But if you're a member of the family, you're more than welcome to do it. Full member of the family. And then that's it. There is no other level. So if you enjoyed this video lesson, thumbs up. If you didn't, thumbs down. Questions, comments, concerns, suggestions, leave a comment below. If you haven't subscribed, ring that bell or subscribe. I don't know what it's called. What is it called? You subscribe and then or ring the bell. Whatever. Either way, have a wonderful rest of your weekend, everyone. I will see Big Wave Trading family members in the chat room Monday morning, and time permitting, hopefully I can do another public video lesson next weekend. It's all about the time. Time is my worst enemy right now. Aloha.